I have Joshua Odebisi, is a banking analyst at Vetiva Capital. He joins me now for this discussion. Thank you so much for your time today. And I'd like to more or less get what we're seeing play out here in terms of sentiment. Do you agree that what we're going to see play out in the next couple of months?
Yeah, absolutely. I mean, because of the late release of the Tier 1 banks and their financials for the half year and potential dividend announcements, we can expect that there will be a bit of a delayed reaction, but it should still come towards the end of the third quarter.
Yeah, but you still see the market being a bargain hunter's delight?
Yeah, absolutely. I'd say that I think most analysts would agree that the stocks are a bit undervalued. Obviously, there was a little bit of gain seen in the first half of the year that really encouraged investors, but that has moderated quite significantly. And those valuations are still well below general expectations. So I think that any investor that's looking at the market now is just rubbing their fingers together and waiting for the right moment to enter.
And investors are still more tilted towards the dividend payout.
Yes, absolutely. The thing is that because we've seen some increases in the fixed income space, obviously that is now competing with the performances we're seeing in the equity market. However, the strong performers like your Zenith, your GT Co and the rest are more likely to still see some attractive buy-ins.
Yeah, but when you look at the results so far in the first half, and I'm just curious to know what trends you notice across the sectors.
Well, what we've seen from the people who have released so far has been a little bit encouraging. Definitely, interest income has been quite strong. A few banks have started to report rising cost of funds on the back of the CBN and MPC raising MPR and now raising the savings rate. We can expect that to trickle into Q3 performance somewhat, but definitely more fully in Q4. So the second half of the year may be a little bit more shaky in terms of net interest margin. But overall, from half-year results, we should still be seeing some solid net interest income.
What about the sectors like the consumer goods space? Any trends you see in that line?
Well, what we've seen has been a little bit surprising, simply due to the fact that despite high inflation, some of them have been able to maintain some solid margins. Obviously, price increases and changes to their packaging sizes and things like that have helped them to manage their margins. But I think that it's been quite encouraging.
But what does that say about the resilience of the Nigerian consumer? Battered on all sides, inflation on one side, and we're seeing the prices still come up.
Yeah, it's quite difficult, but definitely we've been here before, I'd say, and I think this is nothing new to the typical Nigerian consumer. They always find a way to adapt, and what we're seeing is adaptability from the companies as well. So they're acknowledging the fact that the consumers will be willing to take on the same price for a smaller amount or a slightly higher price. So those adjustments, there will be substitutions, but those adjustments are always being made, and the Nigerian consumer is very resilient.
Yeah, but what do you make of the, more or less, when you look at the performance of the market this quarter? On one hand, when you look at the all-share index, down about 4% year-to-date. When you trickle that down to the sectors, you're seeing the consumer goods, more or less the industrial goods, being the worst hit, down about 17% in Q3 alone, and more or less all other sectors are more or less down, just for except the insurance company, insurance sector, which is up just about 1%. What do you make of that performance so far?
Well, it's been quite, like you mentioned already, it's been quite a mixed bag. If you look at the industrial goods sector, for various reasons, sentiment in that space has been quite poor. But there's been a bit of back and forth in the consumer goods space. Banking, at the start of the year, the expectation was that these banks, because of certain macros, would be able to continue to grow. I think the level of growth has been sort of tempered, or our growth expectation has been tempered, but it's still overall positive. And, well, investors have acknowledged that, but they've seen much more attractive options in the fixed income space. So that's really what has been drawing a lot of attention away from your classic, market, your high-yielding stocks, whether in the banking sector or the consumer goods space, or even in the industrial goods space. Meanwhile, insurance has always been this growth sector where a lot of investors are just biding their time and waiting for some sort of explosion to happen.
Yeah, but when you look at what we see play out with the banks, like you earlier alluded to, but I'm looking at Access Bank and their foray into the pension space with this acquisition. What do you make of that story?
Well, I mean, it's part of what we have been coming to expect from Access Bank in terms of their holdco structure. Them and GTCO have really been very aggressive in expanding their offerings, expanding, let's say, their group. And so this is part of their own strategy. Now, Access Bank, we know, has been on a geographical expansion for quite some time. And I think that this is now the second part, which is, giving us pensions and then entering into other industries very slowly, but with acquisitions rather than organic, organic offerings. And that is part of what we will continue to expect from Access Bank, in fact, for the rest of this year and going forward.
Yeah, very interesting, because when you look at that and looking at the telcos, for example, MTN now coming fully with 5G as well, another news flow coming to the market. How does this say about how investors will be looking at this company going forward?
Well, I mean, MTN has been a really encouraging story in the market. I think investors are pretty high and positive on the stock. And like you said, their 5G offering is bound to be a massive moneymaker for them. And I think investors have acknowledged that. We saw their dividend payouts. It was pretty encouraging for an interim dividend, but I think that their margins and their profits are going to continue to expand at a pretty significant rate.
Yeah, but finally, when you look at the market, though, we're seeing currently it's up 16% year to date, compared to space doing quite better. The Ghana Stock Exchange is down about 11%, and the BRM is down up about 1.8%. Just a quick word, what your outlook on the market?
On the market generally, well, I think that we're still going to finish up for the year, although there might be some volatility throughout the remaining months of the year. But I think if you look at the situations going on in Ghana or on the BRVM, you can see that we're definitely in a much better position.